27.6820. Blue Line Futures, that's Oliver Slope. Oliver, great to see you. And again, WASDE report, any surprises there?
Not a whole lot on the surprising end. It was nice to see more of a confirmation than a surprise, and that was some friendly corn numbers. So nice to see corn continuing to grind higher. And really, if you zoom out over the last week, corn, and I guess you could probably say grains as a whole, have just been extremely impressive in the midst of the outside market volatility, where the sentiment in many asset classes has been sell first, ask questions later. And the grain markets, they held in there, and I think that speaks volumes to the underlying fundamental strength that was confirmed today for the corn market. So hopefully we can continue to see some upward momentum. 490 is going to be a big level to keep an eye on for that May contract. That was the breakdown point from February 26th. If we're able to get out above there, I wouldn't be surprised to see that maybe pick up the momentum a little bit and get some of these technical traders back on board who may have been, moved to the sidelines in other asset classes looking for a place to put money to work.
Now, we started the day with the weekly export sales report, and really for the row crops, it was pretty disappointing. Corn down 33%. Soybeans down 58%, wheat down 68%. Is this one we can simply just slide to the side and say this was tariff concerns maybe?
I think that's probably what we're going to have to do for right now, and hopefully that is the case. I guess we'll find out in the coming weeks whether that's true or not. I think we're at an interesting point of year, too. I was talking with clients, and we talked about the grain markets holding in there. I'm very happy that this whole outside market movement is happening at this time of year, where there's still a lot of uncertainty about what the United States will and is able to produce. If this was late summer into the fall, or even in the winter time where we already got the crop out of the ground, I think there probably would have been a little bit more selling pressure in the grain markets. But the fact that we still have a lot of uncertainty ahead of us in the coming months, I think, have kept prices stable at the very least.
Well, you mentioned the uncertainty. How about we take a quick break? When we come back, we'll look at livestock markets, and are they being affected by equity markets? Market Day report continues in a moment. So why the pressure there when it seems like we have some decent news in the market? Well, we'll find out in a moment. June hogs, $1.40 higher, 93.10. Oliver Slopes with Blue Line Futures. Okay, Oliver. Again, well, first off, we had a pretty big rebound yesterday. Did we just go too far, or is there something else kind of working its way through the livestock?
There is a lot of money flying around in a lot of the outside markets, and I think that volatility is certainly spilling into the livestock market. Cattle specifically, if you were to line up a chart of the S&P and NASDAQ and put it next to one of live cattle and feeder cattle, over the past couple of days, they look nearly identical. So I think that's probably what we're seeing is just money movement on the basis of the outside markets. If the equity markets continue to sell off, I think the big question there is how do consumers look at that, and will they look for other cheaper protein alternatives going forward? So that's the correlation there. Looking beyond that, I think that this is going to be a tough one to get over for the cattle market. Even if we do stabilize and get a strong fundamental backdrop out of this, my concern is that you continue to see rallies being sold into from funds who've established these very large net long positions in live cattle and feeder cattle, just on the basis that they're going to have a hard time explaining to their bosses and clients why they're net long cattle in the midst of all this global uncertainty around economic growth. So that's the caution flag. So if you've got downside to protect, I would certainly be looking at rallies as opportunities to establish some sort of a floor.
Yeah, we're just rolling in some of these outsides, and now the precious metals, gold kind of rebounding here, silver moving higher, but we've been watching that as kind of a retracement of in the dollar, U.S. dollars. So any other thoughts here?
The gold market has been extremely impressive. We sold off heavily on the initial onset of the risk-off trade in the equity markets, but have had almost a $200 rally in the past couple of days. So a V-shaped recovery in the gold market, and I think gold is really starting to shine. In our sister company, Blue Creek Capital Management, we run a metals fund, and we've been talking with a lot of institutional investors who are looking for metal exposure. So I think that that's probably going to be an ongoing trend amidst all this global uncertainty.
All right, Oliver, great to see you. Thanks for popping in. We'll see you soon. Oliver Slope with Blue Line Futures. Okay, earlier.